OpenAI is reportedly developing a payment checkout system within its ChatGPT platform, according to the Financial Times. This initiative aims to allow merchants to process sales directly through ChatGPT, with OpenAI taking a commission on transactions. This move represents a strategic shift for OpenAI, as it seeks to diversify its revenue streams beyond its existing subscription model. The integration of a checkout system is still in its developmental stages, with OpenAI collaborating with partners like Shopify to refine the system and discuss potential financial terms. This development follows a recent partnership between OpenAI and Shopify, which aims to enhance the shopping experience by better displaying products and reviews within ChatGPT. The introduction of a payment system could significantly impact OpenAI's financial landscape by capitalizing on the platform's substantial user base. As of June, OpenAI's annualized revenue run rate had doubled to $10 billion, although the company reported a $5 billion loss last year. The potential for increased revenue from transaction commissions could help offset these losses. Additionally, this move may influence market dynamics within the e-commerce sector, as it could provide a new channel for online retailers to reach consumers. The successful implementation of this system could also set a precedent for other AI platforms considering similar monetization strategies.
Faruqi and Faruqi, LLP, a well-known securities law firm, is currently investigating iRobot Corporation for potential violations of federal securities laws. This investigation follows the termination of iRobot's planned acquisition by Amazon, which has led to allegations that iRobot's executives made false or misleading statements regarding the company's financial stability and future prospects. Central to these claims is the accusation that iRobot exaggerated the benefits of its restructuring plan, casting doubt on its ability to operate independently and raising concerns about its viability as a going concern. The financial challenges facing iRobot have been underscored by its recent disclosures, which reported a dramatic 44% decline in year-over-year revenue for the fourth quarter of 2024 and a loss of $2.06 per share. These results, coupled with uncertainties around new product launches and macroeconomic factors, have intensified investor apprehension. Consequently, iRobot's stock price fell by over 51% in just 2 trading sessions, reflecting the market's skepticism about the company's future. Investors who have incurred losses exceeding $50,000 between January 29, 2024 and March 11, 2025 are encouraged to explore their legal options, with a deadline of September 5, 2025, to seek lead plaintiff status in the federal securities class action. This situation is pivotal, as it could significantly impact iRobot's financial health, investor confidence, and strategic direction. Stakeholders are advised to monitor developments closely.
The recent passage of the One Big Beautiful Bill Act, Hour 1, marks a significant legislative change, expanding the accessibility and benefits of health savings accounts, HSAs in the United States. Health e-commerce, a leader in consumer education for HSAs and FSAs, applauds the U.S. Congress for including pivotal HSA and dependent care assistance expansions in the Budget Reconciliation Bill signed into law on July 4, 2025. The reforms aim to make tax-free HSAs more accessible to Americans, enabling them to better manage healthcare expenses, both currently and in retirement. HSAs have seen substantial growth, with assets increasing by $64 billion from 2020 to 2024, according to Devenir, yet had few changes since their inception in 2003. Key provisions of the legislation include a permanent expansion of the telehealth safe harbor for high-deductible health plans, HDHPs, allowing these plans to cover telehealth services before the deductible is met while still permitting HSA contributions. The bill also broadens HSA accessibility by qualifying bronze and catastrophic plans on the Affordable Care Act marketplace as HSA eligible, and allowing those under direct primary care service arrangements to open and contribute to HSAs. Additionally, the reforms raise the annual contribution limits for dependent care FSAs to $7,500, the first permanent increase since 1986, thereby easing the financial burden on working families. These changes are expected to enhance economic stability and well-being for millions of American households, reflecting a strategic move towards greater healthcare affordability and flexibility.
Joby Aviation stock has experienced a remarkable surge, climbing 169% over the past 3 months, driven by significant advancements in its business strategy and favorable regulatory developments. The company, a pioneer in electric vertical takeoff and landing (eVTOL) aircraft, has outperformed the NYSE Composite Index, which saw gains of only 7% and 11% over the same periods. Joby's stock performance reflects growing investor confidence in its potential to revolutionize urban air mobility through commercial air taxi services. This optimism is fueled by the company's expansion of manufacturing operations in California and Ohio, effectively doubling production capacity and positioning itself for mass production, with plans to eventually produce up to 500 aircraft annually. The regulatory environment has also played a crucial role in Joby's stock surge. Recent executive orders aimed at streamlining regulatory processes for eVTOL integration have provided a significant boost, aligning with Joby's mission to expedite market entry. The Federal Aviation Administration, FAA, has reinforced its commitment to the safe integration of electric air taxis, offering vital support for Joby's commercialization efforts. Strategic partnerships with major industry players like Toyota and Delta Airlines further underscore the company's promising trajectory. Joby's recent achievements, including successful piloted flights in Dubai and potential advancements in hydrogen-powered UAVs, have attracted endorsements from industry experts, contributing to the stock reaching its 52-week high. With these developments, Joby is poised to lead the transformation of urban transportation, offering substantial long-term growth opportunities across various sectors.
Bank of America's recent report on quantum computing forecasts significant advancements in the technology by 2030 to 2033, emphasizing the strategic geopolitical, technological, and economic advantages for nations leading the race. The report highlights substantial government investments, totaling over $42 billion, with China contributing 35% of this amount. Despite the potential, BofA has refrained from initiating coverage on quantum computing stocks, citing the current challenge of achieving quantum advantage, where quantum computers outperform classical ones in solving real-world problems. The report underscores the necessity of improving qubit quality and reducing error rates to realize this potential. The quantum computing sector has seen volatility in 2025, with D-Wave Quantum leading with a 90% stock gain, followed by quantum computing with over a 7% increase. IonQ saw a modest 1% rise, while Rigetti Computing experienced a 5% decline. The BofA report also highlights the promising synergy between quantum computing and artificial intelligence, AI, suggesting transformative impacts across industries such as life sciences, materials, and finance. This convergence could expedite research processes and unlock new applications, leveraging AI's capabilities alongside quantum computing's potential. Despite these prospects, leading financial institutions like BofA and JP Morgan remain cautious, not yet initiating stock coverage in this emerging field.
The recent decline in the US dollar index, which measures the dollar's strength against 6 major currencies, is poised to benefit large US multinational companies in the upcoming earnings season. The index has dropped approximately 10% this year, with half of that decline occurring since early April following the announcement of significant import tariffs by the U.S. administration. This depreciation is expected to enhance the earnings of companies with substantial foreign revenue by making it cheaper to convert foreign profits into dollars and increasing the competitiveness of U.S. exports. Analysts predict that the weaker dollar could contribute to a modest uplift in S&P 500 earnings, potentially offsetting the adverse effects of ongoing trade and tariff tensions. As the second quarter earnings reporting season commences, analysts forecast a year-over-year earnings growth of 5.8%, down from 13.7% in the first quarter. However, the weaker dollar could mitigate this deceleration by lifting earnings growth by about 0.5% in the second quarter, according to UBS's David Lefkowitz. Companies with significant international revenue exposure, particularly in the information technology, materials, and communication services sectors, stand to gain the most. Despite the potential earnings boost, investors remain cautious about its impact on stock prices, as the benefits of a weaker dollar may already be factored into market expectations, and other macroeconomic factors, such as tariffs and fiscal policy changes, continue to influence market sentiment.
The global green diesel market is projected to reach a valuation of over $94.96 billion United States dollars by 2033, growing at a compound annual growth rate, CAGR, of 10.50% from 2025 to 2033. This growth is primarily driven by stringent environmental regulations and decarbonization commitments from governments and corporations. Key regulatory frameworks such as the Renewable Fuel Standard, RFS, in the U.S., and the European Union's Renewable Energy Directive II, RED II, mandate the blending of renewable fuels, fostering the market's expansion. Green diesel, a renewable fuel that is chemically identical to petroleum diesel, offers significant advantages including reduced emissions and compatibility with existing infrastructure, making it a viable alternative for heavy-duty transport and aviation. Major industry players like Neste Oyj, Diamond Green Diesel, a joint venture between Valero Energy and Darling Ingredients, Phillips 66, and Chevron Corporation are expanding their production capacities to meet the increasing demand. Diamond Green Diesel's facility in Norco, Louisiana, for example, has an annual capacity of 982 million gallons, contributing to the U.S.'s leadership in renewable diesel production. The U.S. Energy Information Administration, EIA, forecasts that U.S. renewable diesel production capacity will reach 5.1 billion gallons per year by the end of 2024, with daily production expected to average 234,000 barrels per day in 2025. Additionally, new entrants and startups are making significant contributions through innovative technologies and investments, enhancing the market's growth prospects. The convergence of regulatory pressure, corporate sustainability commitments, and technological advancements is expected to drive substantial opportunities for both established players and newcomers in the renewable energy sector, underscoring the economic and environmental benefits of green diesel as a cleaner alternative fuel.
Core financial event. The United States is advancing its nuclear energy ambitions with the development of a new type of reactor fuel, TRISO, tristructural isotropic fuel, being produced by X-Energy at Oak Ridge National Laboratory in Tennessee. Key entities: X-Energy, Oak Ridge National Laboratory, U.S. Nuclear Energy Sector. Context and impact. The production of TRISO fuel represents a significant step in the U.S.'s effort to enhance its nuclear energy capabilities. This advanced fuel type is designed to be more efficient and safer than traditional nuclear fuels, potentially leading to a new era of nuclear power with improved safety profiles and energy output. The development is part of a broader strategy to increase domestic energy production and reduce reliance on fossil fuels, aligning with global trends towards cleaner energy sources. Successful scaling of TRISO fuel production could position the U.S. as a leader in next-generation nuclear technology, influencing both national energy policy and international energy markets.
U.S. stock indexes remained near record levels on Wednesday, supported by encouraging inflation data. The S&P 500 hovered just below its all-time high, while the Dow Jones Industrial Average increased by 62 points, or 0.1%. In contrast, the Nasdaq Composite experienced a slight dip of 0.1% from its record set the previous day. This market stability follows reports indicating that inflationary pressures may be easing more than expected. The U.S. Producer Price Index, PPI, showed no change in June, marking the smallest year-over-year gain since September at 2.3%, which was below economists' expectations and follows a 0.3% increase in May. The favorable inflation data has contributed to a generally optimistic market sentiment, suggesting that the Federal Reserve might maintain its current monetary policy stance without aggressive interest rate hikes. This has implications for sectors sensitive to interest rate changes, such as technology and financials. Bond market yields remained stable, reflecting confidence in the economic outlook. The stabilization in wholesale prices indicates that inflationary pressures are less severe than anticipated. potentially reducing the pressure on the Fed to raise interest rates and supporting continued economic growth. Additionally, subdued inflation data provides a buffer for businesses facing tariff-related cost increases. As these costs are not significantly impacting consumer prices, overall, the market's reaction underscores investor optimism about the continued economic recovery and the potential for sustained growth.
Halpersade LLC, a law firm specializing in investor rights, has launched investigations into potential securities law violations and fiduciary breaches involving Nevada 5 Global Inc., NVEE, Charisma Therapeutics Inc., CARM, and Heliogen Inc., HLGN. These investigations focus on significant corporate transactions involving these companies. NV5 Global is proposing a sale to Acuren Corporation, where shareholders would receive $23 per share in a combination of cash and Acuren stock. Concerns have been raised about the fairness of this valuation and its impact on shareholder value. In another case, Charisma Therapeutics is planning a merger with OrthoCellix Inc., which would result in Charisma shareholders owning approximately 10% of the new entity. This transaction poses questions about its strategic alignment and potential for long-term value creation. Similarly, Heliogen's sale to Zeo Energy Corp. involves shareholders receiving Zeo's Class A common stock, valued at around $10 million, with adjustments based on Heliogen's net cash at closing. The investigations aim to ensure fair consideration and adequate disclosures for shareholders, potentially leading to increased compensation or greater transparency. These developments are significant for investors, as they could affect the valuation of the companies involved and influence shareholder sentiment. Halpersade LLC's actions highlight the importance of protecting shareholder interests and enforcing corporate accountability.